Story of lifetime highs continued on Dalal Street. The Nifty advancing for the sixth session in a row, hitting a new high of 26,200. It's been continuing that streak of these past 3-4 days. Maruti Suzuki and Grasim were the top gainers, and similarly, it was Nifty Auto that was the top gainer as well. In fact, almost all the sectors ended in the green today. But the Finance Ministry, which has recently released its economic review for the month of August, it highlights that global uncertainty is a challenge to economic growth. Another big highlight of the report was that a risk of major corrections in the stock markets could be on the anvil. That will have a spillover effect into the Indian economy as well. In fact, what really is the reason for this fear? Is it time to be cautious so far as investing in the stock markets is concerned? We'll try and decode all of that and more with our guest tonight, PV Subramaniam, the CEO of Subramani.com, is now joining us. So thank you very much, sir, for joining us. I want to understand from you these comments that are coming in from the Finance Ministry. And if you remember, just about 2-3 months back, this government's minister stated that stock markets are in for a bull run and people should be investing in stock markets. And now a cautionary comment coming in. What's the larger underlying fear here? And is this something that the government knows and that is not widely known just as yet?
I seriously don't know, but I've been watching the markets for a long time. And, we have not had a 7-8 year bull run like this. From 2016 to 2024, we have not seen the market come down. So that itself means there could be some risk. But let's look at, when you need a nice flower, what you need is mud, you need some seeds, you need some fertilizer, you need water, right? None of it looks like a flower. So let us look at the conditions that are prevailing. Our current account deficit is in good shape. We'll perhaps in a couple of years hit current account surplus. Our fiscal deficit is in a good shape. We are not, we don't have a problem there. So if your fiscal deficit is in good shape, it means your interest rates are not going up. Your equity markets and debt markets are willing to give you money for growth. Our banking is in robust shape. I seriously don't think there is going to be any major correction. Will there be small correction? Of course, there will be small correction, but people's expectation has to be sensible. You can't expect to get 24% return year on year every year. So 5%, 7%, 12%. On an average, if you get 12, you should be happy. So if you've got 24, be ready for zero, because on an average, you should get 12. So yes, there can be a fall in the market, but a major correction, if you mean could there be a 30% fall in the market or 20% fall in the market, I have my doubts. I mean, a 10% fall, yes, is going to happen regularly. But a 30% fall looks difficult. I mean, I can't see
that a major correction is not really on the cards, given that our domestic fundamentals, remain robust. And of course, you've spoken about all of them. The Indian economy is fairly resilient. That is what the bulletin also says. But sir, when you talk about the Indian markets, we've been touching record highs for the past 3-4 days, and it is driven largely by domestic flow of investors. And that has really been incessant. So how resilient, when you talk about that there will not be a major correction, how resilient will the Indian markets be in the event of a global correction? So if it's not going to be 30%, what kind of a correction are we going to see? If you could deliberate upon that as well.
See, the thing is, the SIP inflows are good. The IPOs are good. 1 or 2 IPOs going fat. People losing money in an IPO or something like that could trigger a problem. Some big fraud or something coming up, right? So if you take the 1992, it was Harshad Mehta fraud or something like that coming up could be a problem. But if you ask me, SEBI, RBI are all alert, banking is in good shape. I don't know what can trigger, but can there be a 10% fall? Of course, that can be a 10% fall. People can remove money to invest in gold, in silver, in debt, in real estate. So some removing of money can happen. No, why would that not happen? So I don't see any major fall happening. Minor corrections should happen. That is what keeps the market healthy. So some small corrections, yes. Big corrections, no.
No big corrections are likely. And so, I mean, are you worried about corporate earnings? We've seen valuations have triggered a lot of fears. There's been a lot of caution about valuations getting corrected. But what about corporate earnings?
Yes, corporate earnings. I mean, let's put it this way: the market has run ahead of earnings. So when good earnings come, market share prices could go down, and if any company disappoints, the fall will be greater. If the earnings are good, remember it's already discounted. We are already paying those prices. Giving you a simple example, Bharti Airtel, with same cash flows, they have another company which is in Africa. That company is valued one-fourth of Bharti Airtel, Indian operation. So yes, Indian market is definitely high price. Yes, Indians could remove money to invest in foreign markets. That could happen. Foreign inflows could go down. Some of those things could happen. But you're perfectly right when you're saying, yes, the market has run ahead of on valuation. So if the EPS disappoints, market will fall. But that will be specific to one particular industry or one particular company. Whole market can't fall because the earnings disappoint. Individual companies can fall, yes.
Yes. So individual companies you're stating, but overall the impact on the markets will be very marginal, very minimal is what you're hinting at. But sir, is there any concern with respect to urban consumption slowing? We speak about the kind of GDP growth that the country is expected to make. And of course, we are on that trajectory to be the third largest economy in the world. But consumption, is that a worry?
No, not really. Consumption by the youngsters is pretty good. Look at Coldplay tickets. It gets sold out in a jiffy, right? So I don't think consumption is a problem, and I don't think the younger generation worries too much about cash flow. They're willing to borrow and consume. You don't know what are the indicators that you're looking at in consumption, but SIP flows are continuing. People are continuing to buy cars. Many cars have a longish waiting list, 3 months, 6 month kind of waiting list. Real estate is not growing at a great pace, but I don't think consumption, urban consumption, depends on what you look at. I don't think there is too much of an issue. People, all restaurants are full, so I don't think urban consumption is going to be a problem.
Okay. But sir, some stress so far as rural consumption is concerned, and why I say that is because there's been some sort of stress on auto sales. Auto sales have been slowing, inventories building up.
Yeah, I mean, see, the problem is when everybody is optimistic and everybody is thinking of a bull market, bear market happens, right? So when nobody can see it, that is exactly where risk comes. So being a little realistic and saying, okay, something could go wrong is right. And also the banks may not have enough money to lend. So interest rates could be under pressure. So interest rates may not go down as fast as what industry thinks. US economy, we do not know what is going to happen. So some of those things are a worry, but I don't think domestic consumption, you should worry too much. Yes, some cars could be lying with the dealers and it may not be reaching out
when
to
you
the
say
end
that the US
customer.
economy, you're not really sure.
See,
So when you say that you're not really sure of where the US economy is headed, are you hinting at sir, some sort of softening of the US economy, and could that be tied to the outcome of US elections?
Yeah, of course, if US elections won't really matter so much, but if the cash flow from FIIs goes down, then when the domestic mutual funds sell or if there is redemption, you want somebody to pick up. So if the FII flows continue, I don't see the market going down. But yes, the rate at which you have got returns, the returns which you have got in the last 8 years may not happen in the next 8 years. So yes, the returns from equity markets have to go down, and that will happen when the results come. It may not meet expectations, therefore the PE could go down. So yes, market could go down, but that is natural weakening. No, when market goes up too much, it can come down. I mean, oil prices are not a problem. Interest rates are not a problem. Government is getting fantastic dividends from PSUs, and the GST is growing. So I don't see that as a problem. But yeah, general slowing down is bound to happen. No?
Okay, so general slowing down is bound to happen is what you're hinting at, but overall, the Indian stock market remains robust, of course, given the kind of interest that we've seen from investors. Thank you very much on that note, sir, for joining us tonight and sharing your thoughts with us. Viewers, it'll be interesting to see what kind of a correction, if at all it comes, how will it be different from the previous corrections that we've seen, for instance, during the COVID pandemic.